But I think that, we're talking shit. I don't think they like it.
Here, let's see if we can restart
there.
this. I think we're getting there. We're getting there. We're definitely live. I know we're live. We're live on Twitter. We're working on it on YouTube. We're working on it. We're working through it here. But let's keep on going.
Come on, China, cut us some slack.
I'll do your job for you.
There we go.
Was a big night in earnings history. This was a
500 Billy, bro. 500 Billy in a couple of minutes.
Just math, but it's still massive. It's mind-blowing understanding how large these companies have gotten so fast. Meta's report, first of all, Microsoft, incredible. Both double beats. They beat on like every metric. And if you go and look at like the numbers, Wall Street's not even close to these guys. Like the way these stocks beat is just different. You don't get upside surprises like this from large cap companies. It's very unusual. Meta does it every quarter, in and out. And I really think that their earnings ability, their earnings potential is better than any of the Mag 7s. I don't know how they do it. I probably understand their businesses.
Meta?
Yes, dude.
This is the artist formerly known as Facebook.
30, 35, 40% top line out here every other quarter, like nothing. It drops to the bottom line. I mean, the margins here are insane. These guys were dead, 2-3 years ago? It was over.
We'll do the state of the markets, but let's throw these up. First one, slide 4 there, Spencer, please.
It's a truly incredible turnaround story.
Meta adding $200 billion overnight. If you guys can throw the chart up there.
Gotcha.
Didn't they have a huge banger of a reaction? Was it last quarter or the quarter before?
Dude, this thing was up $200 billion in a couple of minutes. $200 billion, and then throw up the Microsoft right above it. $300 billion added by Microsoft in a couple of minutes.
This reaction looks like February of 2024.
$550 billion in market capitalization was added just with these two stocks in minutes.
In February of 2024, after they reported a monster beat, also stock gapped higher. It was huge. We were doing all the market cap stats back then too, and they just took out their prior cycle highs from 2021. 2021. This is very similar reaction. Really similar.
Can I do my best JC impression?
Yes.
Is this bearish?
New all-time highs historically are not evidence of downtrends.
This is bullish, and the early reaction overwhelmingly bullish. These stocks gapped higher 6 or 7% yesterday, and they just keep running them. Like
we're gonna get to the state of the markets right now, but I just want to remind everybody. Do you remember when these sick fucks told you to sell all your stocks because of something called a yield curve inversion? Remember those creepy weirdos? Remember? Yield curve inversion, bro? That's why we need to sell our stocks, you fucking idiots. Oh. Could you remember that? That was like real life. Yield curve inversion.
That was a while ago, man. That was
it was one of my favorites. One of my favorites. It made these sick fucks so sad that the yield of one group of bonds was higher than the yield of another group of bonds, and they said that that's why we should sell our stocks. Remember that? That was so good. Shall we? So good.
Okay.
Yeah.
So good. All right, ladies and gentlemen, as a reminder, friendly reminder, that today we get a fresh batch of monthly candlesticks. Woo! Throw it up, give it up for them, y'all. Fresh monthly candlesticks today. Very exciting. We got the Dow futures today up 100 points. We have not seen a new all-time high in the Dow this year, believe it or not. NASDAQ 100 futures up 1.3%. New all-time highs for the NASDAQ. S&P 500 also new all-time highs. 64, 56, up 60 handles for the S&P today. Bond futures up again, 114.5, up 0.5% on the 30-year bond futures. Crude oil down 0.5%, just under 70. Copper down 20%. this morning. Copper getting absolutely slammed. We're going to have to talk about what's going on here with the futures market. But wow, big moves in copper. One of the worst days of all time, if not the worst day of all time. Gold's up a little bit. 33.60 for the gold. Silver down 2.5%, under 37 now, with the VIX trying to break below 15, believe it or not. Over in funny money land, we got Bitcoin up 0.5%, 118,400. You got Ethereum 3830 up 0.5% as well. Over in Solana pushing 180, up 1%, with the total crypto market cap, Mr. Spencer Israel, 3.83 trillion. This is after 3 consecutive weeks of new all-time highs for total crypto market cap, working on a 4th consecutive week. Let's see what we get. It's still got a couple days left. What stands out from this morning's futures?
Everything.
It's copper.
It's copper. Throw up the Coifin chart there, slide 6, please. So copper, not a doctor, just a hunk of metal. There it is. Look at that. We've never seen anything like this ever, right?
This is turning point volatility, and this is one of the most bearish developments, broader market developments I've seen since April.
Copper getting destroyed, S&P and NASDAQ making new all-time highs. You think this copper is this isn't like an isolated situation? You think this is going to infiltrate other areas?
This is Dr. Copper. It's Dr. Copper.
Is it a doctor or just a hunk of metal?
So I think you're right that you don't want to overthink it. But you and John Murphy,
I'm just asking the question.
You and John Murphy taught me well. I'm not going to ignore
me and John Murphy. All right.
Yeah. No, it matters. How much does it matter? I don't know. I could paint a pretty story here that copper rolls, maybe cyclicals underperform. China probably struggles a bit, but growth stocks are just fine. Rates are coming down, right, and booing those interest rate sensitive groups. So you could get like a bifurcated market, and copper kind of jives with the cyclicals. That's fine. I'm not going to overthink it too much. I guess I already have. The bigger point is that now in the same month, we have the best day ever, and by far the worst day ever for this asset in its history.
That's crazy. So in the same month.
When the
isn't that like isn't that like a Hindenburg omen? Isn't that one of those things or no?
It's a Strazza omen. When
the Strazza omen. I like that.
Just let me finish the point, because this is really important technically. When the rate of change spikes in both directions like that, it's almost always at a turning point in the trend. The last great example of this was the dollar when it peaked and rolled over last cycle. It was like fireworks in each direction, and then a bull flag that resolved higher failed, and they just slammed it. If you look at a chart of copper right now, wish I had it, but I don't. If you look at a chart of copper right now, we just broke out of a massive base, and then yesterday's price action failed that breakout in a miserable fashion, and you got the rate of change blowing out in each direction. This looks like new downtrend for copper starting right here today. This is not a downside move that I would be fading. I dumped copper stocks yesterday. I'm not sitting around hanging out in trends that act this way.
Throw up slide 2 there. And there's your copper chart. I mean, here's the Coifin chart, and then here's my version of that. Throw up the new slide 2 there, please, Spencer. Thank you. Whoa. Talk about failed breakouts.
Yeah.
It's pretty nasty, bro.
Yeah, it's terrible.
It's pretty nasty. The materials sector represents like 2% of the S&P 500. You think that's going to drag down the markets, you think, or no?
Could the copper pull down the markets?
Yeah.
Like I said, I just painted a whole picture for you for what it could look like. I think a lot of things could happen. Is copper likely to drag down Mag 7 stocks? No, not at all. So like what market? Could this be a bad sign for the cyclical areas of the market? Yeah, totally. Does this make me worry a little bit about how bullish I am on China? Absolutely.
China's down 1%. Brazil's down 1%. Doesn't seem like...
Should Meta and Microsoft, give a shit about this at all? No, they could probably buy copper for their electronical products for cheaper now.
Probably. I got one for you. Throw up slide 5, please, if you would, my good man. We are looking at the world's most important stock market index right here.
Is it really?
I'm being told that the market is overextended. The market needs to take a breather. And you've got the world's most important stock market index. Hasn't been able to make a new all-time high all year. All year has not made a new all-time high. Last time it did was in December, which was like 9 months ago or something like that. I mean, that was quite some time ago. And I'm told that the market needs a breather. Dow hasn't even made a new all-time high this year. How do you feel about that, Strazza?
I think it's gonna. Most important index. This is JC's doctor. It's the Dr. Dow. Right?
Don't fight Papa Dow. That's how I learned it.
Yeah. No,
do you want to fight Papa Dow?
I think if you like trading boring indexes, you could buy the diamonds and bet on this bull flag.
Dude, nobody trades the diamonds, bro.
The diamonds.
Nobody even know. The kids these days don't even know what that is. I don't even think they call them that anymore.
Can't people trade Dow futures? Like people do the mini Dow futures, the YM. That's a thing. People do that.
Nobody trades those.
See, I don't know how good your information is if nobody's trading.
First of all, nobody calls them the Dow Diamonds anymore. They're not even called that.
They're the diamonds. What do you?
I mean, they were 25 years ago. I don't think they're called the Dow Diamonds anymore.
That's the way I learned it, JC.
Well, I learned that too, but you and me are old school. I don't.
I'm too old.
I don't think they're called the Diamonds. Anybody in the chat want to weigh in? Are they officially called the Dow Diamonds? I don't think so.
People used to call these the diamonds, and that's it. And you know it. I'm not.
You had the diamonds, the Qs, and didn't they call them cubes? Or am I making that up?
I don't think so.
They call them like the spiders. Spiders, diamonds, and cubes.
Yeah.
Right.
Yeah.
It used to be 4 Qs, and then, like we said, too many immigrants walking around the New York Stock Exchange yelling 4 Qs. So they changed it to 3 Qs, right?
Okay, I have a message for everybody. First of all, buy FIG. Are you talking about Fortress Investment Group? Is that even still around? What's FIG? Don't buy that. Don't buy that.
No, Steve. FIG is the IPO. FIG is the IPO today. Figma.
This is a big one. This is a big tech.
This is like the big one, not a big one. This is
so many IPOs these days.
No, there aren't.
Almost like if it's like a bull market and there's like liquidity out there, almost, huh?
Dig the shirt Steve's wearing. We don't sell this. You have to work here to get this kind of merch. This is rare clothing assets.
Dude, I love how Steve is wearing like athletic wear, like if he was gonna go work out or something,
I play tennis now.
Do you? Have you even gone once?
No, we're gonna take lessons soon. My rackets, they're getting strung. It takes a little while. So somebody's in the chat saying the tariffs USA rug pulled countless companies across the world. There are people out here telling me that they're not doing well in the market this year because of tariffs and Trump. Are you hearing this from people, JC?
And I mean, I had some people like blue-haired people like telling me that to sell their stocks like in the spring because Trump was going to ruin everything. Like those people, and I'm not going to mention any names because we know them. Some are even related to me, and there's nothing I can do. Like, sorry, like I don't know what to tell you. Like, there are people out there. Speaking of sick fucks, there are people out there who want the market to go down so that they can be proven right that this president is a bad president or something. And maybe he is, maybe he isn't. I don't even know. I've never met the guy.
And that's dangerous.
I'm more interested in the market. But yeah, there are really, really screwed up people in this world. They're like rooting against the stock market.
As a parent, I wouldn't let my kid go over those people's house and stuff like that. You know what I mean? Like I wouldn't want my kid around somebody who clearly is delusional and bad at making.
If you're buying puts with the VIX at 60, like you can't let your children around those kind of people.
Yeah, I would be like, kids, don't play with them on the playground. Okay, so there are people out here though who are like, they own too many healthcare stocks or material stocks, groups that have been affected by maybe politics, Trump administration, trade war, whatever. Because there are groups out there. You made the decision to keep holding that stock. look around the rest of the market. There are many things working out here. I would argue the vast majority of things are working and working well. You just own the wrong shit. It's not the president's fault or the trade war's fault or anything else or even RFK's fault. You just own too much healthcare.
Let me ask you something, Strazza. I was thinking about this the other day. You know how thrilled we are that these angry liberals have been super short the market and like underexposed?
Yeah.
Wouldn't it be better in theory if it was the other way around and it would be like a liberal president and then the Republicans were super angry? Would that be more bullish? Because I was thinking about it the other day. Like, as great as it is that angry liberals have been around throughout the spring, if it was the other way around and it was angry Republicans with a liberal president, let's just say, and the market was ripping, would that be more bullish or would it be the same? How do you think about that?
I think it would actually be. I don't know. I don't think you would get the same sort of sentiment blowout if there was a liberal president. Republicans, they just like money too much. I think it would be more bullish if this was happening under a Democratic president.
It would be more bullish if it wasn't angry liberals. If it was angry Republicans, it would be more bullish for the stock market. Yeah. That's what I was thinking the other day. I think so too.
Because also, JC, like at the end of the day, like a lot of you sit here and you talk shit about Trump, but we have the data now from the last administration. People have gone back and done the work. A lot of his policy was just flat out bullish, right? Good for business, good for whatever, capitalism. Like we kind of know now this guy wants higher stock prices and his policies do reflect that. And the market at the end of the day, as much as they want to be political and hate him for other reasons, most people know and understand that. This is
I don't know anything about like I guess he wants the stock market higher because he talks about it all the time. So that is probably true.
Yeah.
But I don't know about those other policies. I don't know anything about that. What I do know is that the Trump administration definitely wants higher crypto prices. And Weekend at Bernie's definitely did not, right? That we could say for a fact. I'm good with that.
It was a pretty damn market-friendly administration the first time around is all I'm saying.
Yeah, weren't there all kinds of trade wars and stuff like that back then? In like 2018 totally. And stuff like that?
Market did great until COVID.
Yeah. Yeah, it took a breather in 2018, ripped in 2019. 2017 was one of the greatest years ever. And then COVID. Yeah, you're right. Yeah,
are we in the school of thought that generally speaking, presidents are not impacting the stock market?
It's not the president; it's the Congress.
Listen, they do in ways.
Congress.
No. I'm not saying they can't. I'm saying generally there are other forces at play that
Congress. We have the data. It's
also
the perfect scenario is a Democrat and president. And a Republican Congress, right? Like and that is the best returns ever. But then if you look at a Republican president with a Republican Congress, the returns are also pretty good. So to Spencer's point, it's not the president, it's the like if you really want to go there, it's what's going on in the Congress.
And it's also Spencer. By a long shot. If you're actually to go back and do the work and say, what are the industry groups that are actually affected by policy, this administration? This stuff is so long term, right? The cause and effect from what the government
esoteric. Yeah, it's not
does and can do, and then like the actual fundamental performance of these companies. This is really long term stuff. It's not Fed stimulus.
Yeah.
Cutting interest rates. You know,
exactly.
Everything.
As long as people are angry, that's all I'm looking for. You know, the angrier they are, the better. Like this whole like Sydney Sweeney thing, like she's smoking hot. Like the fact that people are so angry about it, like that is great. Like, what's better than that?
I don't think you want to overthink it, but I kind of like the fact that I'm heavily invested in risk asset markets, and I have a president in the White House who actually wants the prices of those things to go higher. I like that. Like that super high level for me, right? All else equal, I want that guy. I don't care how crazy he is.
I don't know about the stock market. I think there's other things going on in the stock market. I will say for crypto, yes.
You have another crazy Democratic president in office right now. Your NFTs haven't been up so much this year. I promise you that much. Maybe you're not selling an NFT and buying a new house.
Perhaps
not. If that were the case.
Perhaps not.
Straight up. That's just the truth.
Dude, I bought 6 bear horns yesterday. I bought a 6-pack of bear horns. I am not ready for this bear stuff.
Guys, I am so happy. I have an announcement to make. I will be going to Costco for the first time in many, many years. Today, big trip.
Are you gonna get a hot dog? I heard they're $1.50.
I'm gonna do everything that a Costco shopper does. Like I'm gonna be so in it. We're probably gonna spend at least 2 hours there. I'm gonna hit every aisle, do all the samples. I'm gonna check out the electronic. I'm gonna be shopping the deals. 2 hot dogs. We'll probably have one when we come in, one when we go out. We'll stack them. We'll stagger them like that. Over under on the bill.
Listen, here's what you need to do. Over under the bill, $787.
I was going to go lower than that. I was going to say like 500.
Have you seen his?
I think we have to pay for the
lately?
membership too, so work that in.
Oh, what?
Strazza,
I'm not a member.
Strazza, what you need to do is you need to ask for the manager. Okay,
tell him who I am.
You need to ask him very specifically what day the ribeye caps get delivered.
Yeah, I heard this. They talk
because the other Costco goers are in the know, and they go to Costco so they can get the ribeye caps because there's only so many. Make sure that you ask what day the ribeye caps arrive, because they're the same day every week.
Do they have like legit butchers there? Like it's an actual grocery store? Right?
I think so.
No. The meat department is legit. Yeah.
There's a meat man. I can find him. Yeah. There's a subreddit, JC, just about this.
I don't go to these fake social media sites.
How to shop
Twitter.
Costco meats. I don't know.
I
don't know.
I don't do the truth social. I don't do the the blue sky or whatever. I don't the threads. There was a threads there for a hot minute. I don't know what happened to that.
Steve, if you go to the
learning Instagram pretty good.
Steve, if you go to the deli window and knock on the window and ask them, they can give you a giant tube of ground beef, just a tube of ground beef that's like this long. They don't sell it, but they'll give it to you. It's not like out there, but if you ask for it,
dude, Stosh in the house. Stosh says over 1,100. Damn.
I think he might be closer than you guys. We need a lot of shit.
Okay. Just remember the Star of Death. If you see the asterisk, it means it'll never be cheaper. So just remember that tip.
I don't think I've ever been inside a Costco. You know that?
Okay. And also, Steve,
I think these guys are on. No way it's less than a G. That's kind of where my head is at. I'm going to get destroyed.
Also, Steve, since you've been last, they started selling cookies at the food court, and they're pretty good.
What about cookies now?
Spencer, is that $1.50 hot dog still part of the Fed's inflation metrics, or is that just a joke?
I don't know what you're asking. It's still $1.50.
No, I know, but is that like a part of the Fed's thing? No,
right? No. Of course not. I don't know.
I wouldn't surprise me if it was. I'm just that was a legit question. I'm not.
No. There's a famous story, and then we'll bring Ari Wald. There's a famous story that the founder of Costco, the CEO, said years ago, "If you ever raise the price of a hot dog, I will effing kill you." So he said that to his underlings.
Can you explain to me the situation with Kirkland and Costco?
Kirkland
is their brand.
Kirkland is their brand.
But they spun it off because Kirkland.
No. They take other people's stuff and put their own labels on it.
Different Kirkland, bro.
This isn't the Kirkland?
No.
I've been looking at the stock. Like, how is this Kirkland?
If you buy Kirkland vodka, it's Grey Goose.
You're right. Their golf balls used to be Pro Vs.
Yeah. Wait. No. Kirkland, the ticker, what is the ticker Kirk? That's not.
It can't be Kirkland.
That's not the same Costco, thing.
Bro. I just watched a documentary about Costco. The CEO used to be like would fill boxes or something like that. Like he worked his way all the way up. It was kind of interesting.
Yeah. Okay.
I'm such a fan of this business long term, and I think if you are too, you run out and you buy BJ's right now. BJ's is gonna do the Costco. They just need time.
My family is a Sam's Club family.
Yeah, but that's Walmart. You can't buy Sam's Club. You know what I mean? Like, if you want to just buy one of these businesses outright and make a higher beta.
My wife makes these decisions.
No, I'm just telling you. BJ's is a fraction of the size of Costco. They barely have the footprint that Costco has. They're going to grow and expand and try to do the Costco model. And I think that's just a great long-term investment opportunity.
Mr. Steve Strazza, we have a very special guest with us today to celebrate new monthly candlesticks that come today, to celebrate the new all-time highs in the S&P 500 and the NASDAQ 100. We have Ari Wald. He is the managing director and head of technical analysis at Oppenheimer. So kind of a big deal.
Love it.
Bring him out.
Yo,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Ari Wald in the house.
JC, what's up? Good to see you.
Everything, man. Everything. Ari, you are one of those guys that doesn't, you don't let me get away with anything, right? I got too many yes men out there that just yes me to death. I don't need another one. You are one of those people like, no, JC, you are wrong. And I love that about you, Ari. I really do. I appreciate that so much.
We have a nice back and forth. I think when I do these, right? It's not always it has to be an agreement.
Yeah, which is great. I love it. So let's find out what we're disagreeing with today. I quoted you the other day. I was talking to some folks, and talking about the Dow Transports and the Dow Industrials. I was like, my friend Ari, he really puts a lot of weight to the small caps. And he looks at the Russell 2000 as kind of like that confirmation. And, I never looked at it that way, and I still don't agree with you, but that's not the point. You really got me thinking, and I think I find myself thinking about this quite a bit. So why don't we just start there? You've got the Dow Jones Industrial Average, world's most important index as far as I'm concerned, hasn't made a new all-time high since December the 4th of last year. Hasn't made a new all-time high all year, number one. And the Russell 2000 hasn't made a new all-time high in longer than that, right? So if we got those kind of things, Ari, I'm being told that the market is overextended and this is unsustainable. But when I look at those kind of assets, not even hitting new highs, is that actually true?
Right. Well, and Russell really even below its 21 high. Here's first off my reasoning for thinking that I call it the new Dow large S&P versus Russell 2000. It's really just the importance of market breadth, and I think the relationship between large and small cap stocks captures that. The thought process being laid into the equity cycle, investors tend to run to the stability of large caps. They'll sell their small caps and strengthen the cap weighted indexes will mask this underlying weakness. And obviously we use internal breadth gauges for that, but I think the Russell 2000 can be a proxy for that. I think it's generally correlated to a lot of the breadth measures that we're looking at. Rather than the relationship between industrials and transports, which I guess the economy was a better determinant of that 50 years ago, probably less so now, which has been because it's much more service oriented. But to your point, and I think what you were stressing here is that a lot of these major market averages, X the S&P 500, X the NASDAQ 100, have not made it to a new high. I think this is where I might not see. I think a lot of some people are saying breadth is broader than it is right now. This is one of my top concerns. I've been writing about it, and I feel everybody has a disagreement with me on this. If I look at the percentage stocks on the Russell 3000 that are trading above their 200-day average, I look at the Russell 3000 because it's an all-encompassing index of large, mid, and small cap stocks. It peaked at about 59% last week. That was the highest total that it's had through this run up to new highs. That compares to readings closer to 70% throughout 2024. So internal breadth is nowhere as broad as it was a couple years ago during kind of the best part of the bull market cycle. Now, again, I've been saying that there's been offsetting positives. Market leadership has been terrific. High beta cyclicals outperforming low volatility defensives. And so it's really just as part of the mosaic, it's a yellow light that won't turn red as long as trading action remains firm. And trading action has been pretty firm right here, JC. Would you agree?
Ari Wald, two companies alone added $550 billion in market capitalization in a matter of minutes. I understand it's just math, right? So the size of these companies and the percentage gains afterwards equate to that $550 billion. I get it. It's just math.
Just math.
What does it mean to you when you see that?
Well, it speaks to the importance of momentum. Leaders continue to lead. the larger secular trends that I think that are at play, that we're at this large growth driven secular bull market. It does speak to the simple math equation of it. You know, when these big stocks become just big parts of a cap weighted index and they do well, yeah, no duh, they're going to contribute to the gains in that index. One of our points to that has been, as you look at what has driven that bifurcation through the years, it's really not been one of our differentiated points. We've agreed the bifurcation, perhaps as extreme as it was in the late 1990s, where we've disagreed, is the driver of that. It's not that these stocks are doing anything out of the ordinary, or at least I would argue, thinking about proxies like the NASDAQ 100, the steadiness is somewhat underappreciated. That you haven't seen the gains, at least in the market, and those in the NASDAQ 100 reach anywhere close to the late 1990s. Instead, it's you blame everything else for that bifurcation. It's how poorly the rest of the market has done. It's the fact that small caps, the Russell 2000, has made almost nearly zero progress over the last 7 years. At that April bottom, really coming right into the same levels it was trading at in 2018. So really the case for convergence here, if we're going to see that normalize to a certain degree, it's a case for catch up, not for catch down. It's why we still think we're within this secular bull market. But for as it stands, I think the attractiveness of those large cap growth companies is still the more attractive risk reward. I mean, Microsoft took a lot. There's been checkbacks along the way. I mean, especially as we think about Microsoft, that had been the laggard through much of 23 into 24. I mean, Microsoft really just starting to get going again. And so that's what I think about it. And then it becomes just the market, the premier anomaly, the momentum factor. These stocks have made their way back into high momentum stocks.
Ari, you're the one who's always talking about how, I like how when you put the charts and you got all the tables of all the bull markets going back 100 years. I like how you do that. It's really, great work. Excellent. I can see why you're the head of technical analysis there at Oppenheimer, right? You put the box, you got the box in the box. Very well done, sir. And, you have one of these charts where it shows all the bull markets over the last 100 years and technology as a leader and outperformer in almost all of them, right?
Mm-hmm.
And, when stocks are under pressure, you tend to see consumer staples outperforming in those sort of environments. So when you take all of that great work that you do, you have a good think about it, and then you take a look at a ratio between those technology stocks that tend to do very well in bull markets, and you compare it to the consumer staple stocks that tend to do better in the bear markets, right? They're at the highest levels ever, Ari. Highest levels ever. What does that mean to you?
Well, that just speaks to market leadership. So you can look at internal breadth, you can look at market leadership, sentiment, momentum, price action, and market leader. And obviously, they don't have to all give confirming signals, but perhaps the key definitive positive here has just been the leadership of the market. Everything you just laid out, we're seeing risk on leadership that is consistent with an intact bull market. And so, for those, I think it's as simple as that. I heard you write about utilities the other day, which we've been writing about as well. And I know you had called, and what's interesting about that sector, and I agree with your assessment. I think you looked at the 03 to 07 bull market as well.
We were just young lads, Ari, just trying, just running around that New York City, just trying to figure things out. Do you remember that?
I do remember that. They were fun times for sure. That's when we met. And we did, as you kind of led in with some of our cycle work, we went back and looked at sector performance in the third year of a bull cycle in particular. Forgetting about, we know tech is going to, right, if this is the start of a new bull market cycle, you want to run into technology. But we looked at the third year in particular. Guess what was one of the top performing sectors in that third year? It was utilities. It was actually utilities and healthcare, but here's where it differed. If it was utilities, you were more likely to reach the fourth year. If it was healthcare, you were more likely to end. So the fact that it was, and now it turned out we've seen some better action in utilities, perhaps really not leadership. It's been more of an absolute price breakout. The relative trend has been somewhat subdued as we've seen this move towards beta, but I do think it does set up as an attractive seasonal hedge here as we get into this kind of weak time of the year, August, September, October.
Throw up. I thought it was really interesting. The equally weighted utilities index here, closing at new all-time highs. So you're not just seeing, the big, the big names that are driving that, the market cap weighted version, but just on an equally weighted basis, new all-time highs. Ari, do you consider this? I mean, why don't you take the other side, right? So when people are like, well, this is a reason to sell stocks, this is defensive. Like, you mentioned that in year 3, utilities versus healthcare, forget the cycles for a minute. Just looking at utilities on their own right, how do you think about the strength? Does it say just, hey, just buy utilities and shut up? Or,
Well, it's our favorite defensive sector. It's one of our recommended overweights. And I think you're doing a great job here looking at these sectors on an equally weighted basis. So it's not just capturing the strength or lack thereof in one or two. What's notable, if you look at the XLU, the highest weighting within there, Nextera, it's 11%, actually does not look good.
Right.
So the argument is that it's holding back what could be even better performance there. And but here again, you want to differentiate between absolute participation and relative leadership. So utilities are participating. You would expect that just in a bull market, you would expect all stocks to participate. On a relative basis, if you were to divide that by the S&P 500, doesn't look as strong. It looks a little bit better versus the equal weighted S&P 500. If you kind of de-emphasize a lot of those mega cap names, I think that's where you're kind of capturing some of that emerging relative leadership. And so that's why we think it kind of sets up here as a tactical idea. A lot of our favorite ideas have run up a bit. They're overbought. It has become difficult to find new ideas to talk about here as a sell-side research analyst. And so I'm finding myself talking about areas like utilities and gold miners, just because, areas that could, if we were to get a little bit of a downtick in interest rates, maybe a little bit of setback in the equity market, they could see some relative strength pick up.
I wanted to, this is one of your favorite ratios. You and I are both constantly talking about this. This is the high beta, low volatility, making new all-time highs. So I wanted to show this chart, and then I wanted to show the consumer staples relative to S&Ps, both of these things, because, when people are like, oh, JC, what's going to, derail this bull market? I'm looking at these two names. Can you throw out the high beta, low volatility? So high beta stocks relative to low volatility, hitting new all-time highs. And if you could drop down to slide 4, this is consumer staples relative to the rest of the market, hitting new all-time lows. So for me, what am I looking for as a heads up that things are going to be turning? I would say a rally in this one and a rollover in that high beta, low volatility. Tough to be bearish without those things happening, as far as I'm concerned. How close do you think I am?
It's all the same trade. You're right. They're all correlated. I mean, you looked at XLK divided by XLP. This is pretty much the inverse of that.
Right.
XLP versus SPY, and beta versus low vol is going to pick up with it. That's the key positive. And we had a chart where we were showing kind of the non-confirmation in some of the breadth metrics, but the confirmation and the strength in the leadership. So again, as we think about the mosaic, there is some mixed evidence. You could, as much as breadth is a concern, I think leadership is an offsetting positive. At the very least, it tells you that you still want to have some cyclical exposure to the market. And as we think about underperformance and relative weakness, forget about consumer staples. Look at what's going on in the healthcare sector.
Yep.
I mean, for us, that is what really represents low momentum. It's very acutely on our radar because we're always thinking about.
What about the biotech? Is that just like another animal altogether?
Well, I know you were on the compound talking about this one, the XBI. This is the reason why we haven't seen that broader breadth in terms of stocks above their 200-day average. So if I'm looking at stocks above their 200-day average on the Russell 3000, for starters, the Russell 2000 captures 2/3 of the breadth equation. That's why we like the Russell 2000. Then if you kind of dig a little bit deeper, small cap biotech is 11% of the Russell 2000 in terms of number of companies. So if you want a picture of the area of the market that's most concentrated as far as limiting that broader 200-day participation metric, look no further than the equal weighted XBI, which pushed right up into its 200-day average and has not been able to push through. It's been like a magnet. It's just amazing the respect of that 200-day average if you were to look at that XBI chart.
What
right
about
here,
regional
right now.
banks? You got a ton of regional banks in there too, Ari.
They pushed through. I mean, at first we were kind of highlighting, okay, can we see some broader participation if small caps and regional banks push through? They did push through come in July. We didn't see that number tick above 60%. We always talk about that 60% threshold for the universe overall. And so we said, okay, well, what's holding it back? And it's really biotech. I don't really trust regional banks. To me, yes, they're also they move back above their 200-day, but I just see a lot of long-term structural overhead resistance. If I'm playing banks, I'm playing the big banks. I think they're much cleaner charts, both in the U.S. and globally. As we talk about the strength overseas, the momentum factor is picking up the leadership of financials and a lot of those global banks that just look terrific, moving to new cycle highs, and they kind of look closer to the big banks in the U.S. I'm less sure about the regional banks, which, again, that speaks to my preference for large over small.
Broker dealers continue to make new all-time highs, right? So to your point, some of these bigger ones are doing a lot better than the regional banks. I want to hard pivot to slides 2 and 3 here. Ari Wald, go ahead.
We don't have the slides here, but 2 charts to check out in the U.S. JP Morgan and Citigroup. Citigroup carrying through 7-year resistance going back to 2018. Check if you look at that one on the versus from the great financial crisis, major breakout. Then look at JP Morgan's relative trend on a quarterly basis going back to the 1980s. This was a breakout above the 98 peak, its highest relative level since 1987. Major relative breakout for JP Morgan.
I love that you're looking at quarterly charts. How many guests do we have here versus S&P 500? How many guests do we have here that come in here talking about quarterly candles? Why don't we
I'm a big picture guy, JC.
Listen, you are Ari Wald. You are one of a kind, sir. Here, throw Citigroup up. Here, throw up the new slides 2 and 3. So this is what Ari's talking about. So this is a quarterly chart here. Quarterly line chart. You don't see a lot of quarterly line charts out in the wild, Ari. I don't know what you guys are doing at Oppenheimer.
And that
you don't see a lot of them where I come from. I like
there's
it.
There's even history going back to the 80s. So now you're like, now you're retracing this big underperformance from 86 to 87. There's like a lot of room to the upside. You could see the big relative peak if you were to take that back even farther. But I digress. I just wanted to
throw up the Citigroup chart.
While I'm on the morning show, I wanted to share some of these charts that I'm looking at. I mean, another one.
Ari, do you remember 16 years ago or so, the ongoing joke was that the ATM fee at Citibank was higher than the price of the stock? Do you remember that?
Was it? Yeah, I don't remember that joke.
This was before all the splits, reverse splits, and all that stuff that they did. But it was like a 98-cent stock. It was a penny stock, the Citigroup.
Yeah,
I remember that being like the joke.
I do remember. And if you look at that relative, and it sucks there, it really had, all these banks, they had major moves off the 09 low. They've actually all underperformed since September 09. Like, it's been horrendous. If you were to, for some of them, for names like Citi. I mean, if you, aside from that big move off the low point, if you bought those 3 quarters late in late 2009, you're underperforming versus the S&P 500.
Hard pivot here, Ari. Hard pivot. We are looking at slide 4 here, please, Spencer. I'm looking at all of these charts. I look at all these sectors, and they're all making new highs. And then I look at this one, This one hasn't done anything since the summer of '08. I remember what I was doing in the summer of '08. That was a long time ago. Summer of '08, I was 26. Just, running around New York City, single man, it was a long, long time ago. And here we are, same exact place.
That was the end of the big secular run up in energy in the energy sector and oil prices.
They were like some of the only things working at the time. Everything else had already rolled over. Like transports were kind of still working. You had some of these fertilizer stocks still working, and that was it. Everything else was crashing already.
Right. And now they went into secular bear from '08 to 2020, 12 years. They had the big run up off the 2020 lows, but they've been underperforming over the last, 2+ years here. And so my take of this, first off, is that that's relative weakness. If you were to look at the relative trend, they've been underperforming. The relative ratio is weakening. So I do see relative risk and relative weakness. For that reason, we do recommend underweight exposure to the energy sector. Absolute terms, though, I mean, this is part of this speaks to the outlier being the fact that some of these value areas, as we think about going back to the divide between growth and value, what has worked, what hasn't worked, the outlier to me is not the strength in the NASDAQ. It is just how poorly some of these value sectors have done. Here, energy has shown no progress over the last 17 years now. That's
17 years, Ari.
And so the case for convergence is if that can break to the upside. And we're starting to see that. We're seeing it in world. Again, US versus world, another proxy for growth versus value. Well, guess what? Now the world is breaking above those high levels from the great financial crisis. Now they haven't taken on a leadership role. I would argue that the relative trend is still in favor of the US. But again, it's about participation. And if we can see one by one, world has broken higher. Now energy breaks higher, small caps break above these big long-term resistance levels. This is our case why we still think we're in the middle innings of the secular bull market, or at least the potential drivers of the second half of it. But still, with that said, I still prefer the risk reward of what has worked and of those, growth areas, which again, I would argue that where the steadiness is underappreciated.
Throw up the refiners. When you look at oil services, explorers and producers, you look at refiners. Refiners look the best of all of them.
Well, I agree with that, and that's how we look at. We have our top-down views and then our bottom-up views, and we do these 50-50 lists, which are buys and sells, and we're really trying to identify what's going to outperform and underperform relative to the benchmark. And so we're looking at every stock in the energy sector versus the energy sector to see, because there's always got to be outperformance within the benchmark. And you're seeing much better action, I'd agree, in the refiners in recent months. And as far as where to be in the energy sector, that's where you want exposure, less so E&P.
Most of these energy stocks don't look that great, particularly compared to like technology and things like that. And then, Ari Wald, then this one pops up onto the screen, and I'm like, damn, son. Damn, son. This does not look like the other energy stocks. Ari, what the hell's going on over here? Shout out to Canada.
Shout out. And so this was what high? I got a private. Above the '08 high. And this kind of fits the idea. If you're looking for a structural change in the energy sector, as we think about the end of the prior kind of 12-year bear market, let's start. And we've also made the case that it hasn't really been definitive at the sector level. But if you want exposure, let's key on the stocks where we are seeing that structural change. Let's key on the stocks that have broken through those levels from 17 years ago from the great financial crisis. And here is a great example of one of those names that fit the description. So, again,
would you call this relative strength, Ari?
That is relative strength. That is the name of the game. We are momentum investors that overlay technical analysis on top of our process, and momentum investing is all about relative strength. And that's it right there. When we consider what the rest of the sector has done, and then we see what this stock is doing, I don't even have to know what it is. I don't look at these Canadian stocks very much.
Well,
But
maybe
what
you should, Ari. Maybe you should start looking at the
I
Canadian
can see
stocks.
this chart tells me all I need to know is that there's something going on in this stock in relation to everything else that I'm seeing in energy.
Shout out to Canada. All right, Ari, we gotta turn this. You know, we got Ari Wald here in the house. Ari Wald, managing director, head of technical analysis at Oppenheimer, friend of the show, fan favorite, one of my favorite guests. Big day yesterday, Ari. Worst day ever for copper futures. Can you throw that up? I saw the 1-day rate of change just got put up there. You know, as an equities guy, right? You're an equities guy, but as an equities guy, you're looking at the bond market, you're looking at the Forex market, you're looking at commodities. We were just talking about energy, for example. When you see the worst day ever for copper as an equities guy, what does that mean to you?
It means, well, I think that does speak to, and it was generally, and we've been, market weight. Well, commodities as a whole, I think they're kind of range bound as we're looking at the actual commodity price, and that's translating to underperformance for the sectors. We are recommending underweight exposure to materials, and I think it goes beyond a lot of these metals and mining names. We've actually been talking about it's kind of the chemical names and container and packaging. Really, gold miners had been the one bright spot, and so I see this action in copper, and I mean, that's a pretty drastic move from a 52-week high to below the 200-day average there. I don't know what is actually driving that, but doesn't look bullish. I can tell you that.
But as an equities guy, does that spook you at all? Is it just in line with your, messy commodities market thesis?
I think so. Let's look at very simplistically. Forget about just the 1 day. I think 1 day moves, sometimes it could just be noise, but it does simply bring the price of copper back into the same range it had been in recent years. And maybe that just speaks to ongoing range-bound action. I would argue in terms of the implications for the equity market, generally speaking, you don't want these intermarket trends either too hot or too cold. It's actually the intermarket stability. And actually, we have a great chart looking at the 52-week rate of change for the Bloomberg Commodity Index and how it's inversely related to forward returns for the S&P 500. The poorer performance for commodity prices over the prior 12 months, the better returns for equities over the next 12. And so I think perhaps the fact that we haven't had this big explosive move in copper prices, not that this was representative for commodities as a whole, it kind of does remove up what would have been a potential headwind for the equity markets looking ahead.
Ari, I'll turn it over to you. What did we not talk about today? We talked about a lot of things. I appreciate your time. What's on your radar that you don't think anybody's talking about?
I still continue to come back to this. Cycle behavior is very important to us, and we've seen this very swift breakout. We put a study together looking at prior periods of the S&P 500 moving from a 52-week low to a 52-week high within 6 months or less. I mean, it did it this year in only 3 months. And what we found is that it's historically been consistent with bullish market behavior, been followed by above average forward returns. You typically see it at the start of a new bull market. If you look at it back, generally speaking, every occurrence that we saw, the majority of them were occurring off a major market low. We quantify major market lows as an 18-month low, which we did not meet in April, or they occurred during these very prolonged declines, similarly into that low point. And this time around, it was a very quick setback. So the action here it's bullish action. It's a bit unprecedented is kind of what we want to underscore here, and all the reasons why we still want to play by this third-year bull market. The rules to a third-year bull market is you kind of want to stick with what's working. We've done a lot of work on the momentum factor, typically outperforms later in the equity cycle, both moving into a major market peak and coming out of it. So talk in my book here, but we do think that the momentum factor continues to work looking ahead and is very attractively set up at this stage of the cycle.
Ari, who's going to win the Super Bowl this year?
We're repeating. Go Birds.
Yeah, I had a funny feeling you were going to say that. I had a funny feeling you're going to say that. All right. Hopefully it's the Dolphins against the Eagles. Where is the Super Bowl this year?
I'm not sure, but we got some baseball World Series before that, JC. So we're like we'll talk a few times before then, but I don't know where the Super Bowl is. But hopefully the Phils just made a big acquisition, shoring up the bullpen there. But they're in a tight race against the Mets.
It's in California. It's in San Francisco.
You go to those things?
Do I go to Super Bowls?
Yeah,
I've been to a few. I've been to a couple. I like to go when it's in New Orleans. Every Super Bowl should be in New Orleans. I will die on that hill.
Were you there this last year?
I was not. I thought if the Dolphins would have gone, I would have gone, but they didn't even come close. So but yeah, New Orleans is the only city where you stay, where you party, and where the game is all in the same area. Right? Like New York is a terrible place for a Super Bowl. Miami, terrible place for a Super Bowl. San Francisco, it's not even in San Francisco. It's in Santa Clara. No, it should be in New Orleans every year. I'll die on that hill.
Hot take. I like
hot take. I say it every year. A lot of people agree with me, actually. All right, Ari Wald, ladies and gentlemen. Give Ari a follow on the old X. Tell the folks over at Oppenheimer that we appreciate them for letting us borrow you for a little while and talk markets. Talk soon.
Good stuff. Enjoy your summer, JC. See everyone later.
Ari Wald.
Great stuff.
Ari can bench more than me.
Okay. That means he can bench more than me. Hey, 9:31. Let's get out. We're not going to have Sean on today. Sean will be on the show tomorrow. Don't worry. We did not forget about Sean, but he'll be on the show tomorrow. We got to go, though. We got a busy day here again on Stock Market TV. Steve is getting ready for the Brick and Multiplier weekly strategy session. If you are a member of that, you know where to find it. You'll get the email. That's every Thursday at 11 o'clock. Gold Rush has a special live stream today. Jason Purz going live with Mish Schneider, who I have not spoken to in quite some time. But I'm a huge fan of Mish and love her. And she'll be on at 2 o'clock Eastern right here on the channel. Louis has got his crypto. Actually, Louis was doing 2 crypto streams today. He's doing a crypto video for his members, and then he's doing a crypto live stream at 6 p.m. right here on the channel. There's just too much to talk about with crypto. So we got a lot going on. If you missed it yesterday, I did drop the link in chat and in the description to the live event, the replay of the live event with JC and Herb Greenberg, talking all about these scams, these Chinese stock scams, the red flags that Herb finds, how to avoid them, basically how to be skeptical in a bull market or any market. It's good to be skeptical. Skepticism is a good thing, right? So I watched it. It was great. You should watch it. Herb is a wealth of knowledge. I fear, JC, that you only scratch the surface of Herb's wisdom. So we may have to do another one next week, but we'll see.
Maybe. Go watch the one from yesterday. That was a lot of fun. And, I had read, Herb pieces on the scams and stuff like that, and I understood it. But, man, when he's explaining what's going on and how these stocks got destroyed and why, I mean, this isn't going away.
Yeah.
AI is going to be a problem, if you're not taking care of it right. I'm going to 2 weeks from now, me and Phil Perlman are going to go get our World Coin. We're going to go get our retina scanned. I didn't think Perlman would be down like that. But he's like looking at it as kind of like a field trip. Like, oh, okay, I'll get my retina scanned. I was like, okay. I didn't think I figured he'd be like, oh, I'll meet you afterwards and we'll just eat animal protein. Like I was ready for that, and then he's like, oh, I'll come.
I was looking into buying these Meta Glass to play with the new toys. There's nothing there. It's basically like just you have like audio and you wear it on your ears.
But they're like glasses.
Yeah, but like
right?
there's no like insert of a screen or anything cool like that. You got to get it to a point where you can talk to your glasses like your AI assistant. Like you could talk to the Meta AI, but not Chat GPT as it is right now. So it's just, they're not there yet. But eventually,
like if I double tap and I go, hello. Yeah.
I think you could tell like play a podcast, stuff like that. But it's got to get fully, connected to all of our other tools to the point where you can go for a walk or I could be on the golf course with my glasses on, get an idea, have a conversation with my AI, say, hey, bullet this out for me and drop me a Google Doc in Slack for when I get back to my desk. That's the shit I need. We're not there yet. I did look into it.
You know what I need? You know what I need? And then this could be our research for the day. You know what I need, Strazza? I want the AI to like message me when there's like something cool going on around me. Like for example, like if I'm just walking down the street, like it'll ping me, be like, hey, there's a happy hour right around the corner that starts in 10 minutes that has like 50% off champagne and like, you know, they're just giving caviar away or something. I don't know, I'm making it up. Or like, hey, there's like a 5-star sushi, you know, like speakeasy situation that you would never know is right next to you, but
Special
it is.
events.
So you should open that door.
Absolutely
you know, like,
right. These are some of the things, like what you're describing are some of the things that I use mine most for. Where should I go for happy hour tonight? Where's the live music? You know what I mean? It'd be great if they could get to know you and you can develop an alert system.
Look at this coffee thing I got my
That's
wife.
so hot.
Oh,
Isn't that nice?
Masters gear. That's beautiful.
Nice.
Mug.
Isn't that lovely?
Mug. Hey, Ryder Cup coming up. Who's excited? I'm excited.
So that's the one where the Americans and the Europeans?
Yep.
Dude, fuck those Europeans. Remember last year they're all dancing in the bus and everything like that? Fuck those guys. Let's go USA, baby.
That was it was 2 years ago, and it did. It gets hot. This more than any other golf event, you know, you see the personalities come out. These guys are very competitive.
Seriously. Let's go, America. Shout out to the USA, baby. Let's go.
It's a great event. One of the top sporting events in the history of sports.
I remember Rory talking shit, man.
Rory's got a little spice to him.
I don't even dislike Rory. I love Rory. And he's hating on America.
Him and Lowry, they get all amped up, dude. It's exciting. It's fun. It'll be great. It'll be awesome again this year.
All right. Thanks for watching. We'll be back tomorrow. Who's on the show tomorrow? Oh, I mentioned Sean will be on the show. Louis will be on the show. Alfonso will be on the show. It's a busy show tomorrow. Louis, Fonz, Sean, a lot going on. So thanks for watching. Strazza, good luck on your video for members in like an hour and a half.
I think you sell this bouncing copper. Like this isn't like Liberation Day 2.0. No, this is a change in character for sure.
It's never like the last one. People always think it's like the last one. It's never like the last one.
I'm not sitting
it's
around.
Always different.
Friends. Forget about it.
All right. Yeah, Rixa, that's right. Drop me a like. I'd appreciate that. Go make some money. We'll see you tomorrow. All right.
Bye, guys.
Adios.
I can't take no loss. I don't even know what it